All right, everyone. Thank you again for being here. It's so good to have all of you here. A lot of new faces here. My name is Tamila Rajasingham. I am also a real estate agent with eXp Realty. And it's super awesome to have a lot of you here. So please feel free to get in touch with us after the event as well. We'd love to connect. If you're thinking about getting into real estate investing, today's the day. You're at the right place because we have none other than Connor with us, who's a top real estate investors in the US. And we're going to get started with talking about the method that a lot of investors across North America are talking about and are using to grow their real estate portfolio. And it's called the BRRRR method. And I'm going to let Connor break this down for you and explain everything that's to do with this method. And before we get started, I do want to give a quick intro about Connor. For those of you that don't know him, Connor actually has one of the top channels on YouTube for real estate investing called Investor Army. I highly suggest all of you check it out and subscribe. He's one of the top real estate investors, entrepreneur. He's also the top 50 influencer here at eXp Realty and co-founded one of the world's largest international organization here at eXp Realty with over 1,500 agents and counting worldwide. So please keep your mic on mute and ask all of you a question at the end if you can, please. Connor, it's all yours.
Hey, thanks, Thamila. How's everybody doing? So guys, what I'd like to do here is kind of impress upon you, how to create wealth throughout your career. So sales is a great way to create an income, but it's not a great way to create wealth. So how is wealth actually created if you think about it? Most people don't ever slow down to study this. So my past was I ran out of money. I went $100,000 in debt and failed miserably, and I had to teach myself internet marketing and social media marketing. But I had to figure out how to do this with relationships between time and money, where most people struggle to build wealth. And so what happens is, to control equity positions and cash flow positions, you need money. You do this through active income. So there's three ways of creating an income: actively, residually, or through equity models. And we're going to talk about equity and residual models with the BRRRR strategy today, because real estate or wealth is created through real estate ownership, not sales, and through cash flow models, residual income models, because this gives you your time freedom, not just your money freedom. So when we think about selling houses, we're just trading time for checks, active income. If you stop trading your time, your income completely stops. These other two income streams that we're going to create with the BRRRR strategy keep growing, even if you're not working on them, if that makes sense. Your time's not directly influencing that project to make your net worth grow. So let's talk about real quick, guys, some of the limitations in trying to build a rental portfolio the normal way. So let's say that you're going to just find a property in the marketplace and you're going to go to a bank and they're going to lend you 80 cents on the dollar of that property. So you guys do some quick math with me real quick. Let's write $150,000, which is a pretty typical rental property. I'd try to stay under $225,000 if I was you guys. Most parts of the country, once you get above 225,000 going up into 250, if you're going to rent these properties, depending on the way you finance them, most of the ways in the relationships between your rent rates, your taxes, and what you're going to have to control the property, it's not going to cash flow. So our cash flow range is 225 and under, if that makes sense. So let's take a property example for $150,000 and times it by 0.2. That would be what you need to bring in cash as far as leaving in, because the lender's not going to fund the whole thing. And that's $30,000. Now we're not going to put in this, actually going to be a little bit more expenses in this, because as you guys know, there's closing costs and then there's carrying costs in a project. But let's just look at that $30,000 just to not convolute things. Now, if you wanted to have 10 rental properties like that, times that number by 10, it's $300,000 now. Now think about what you would have had to pay in your taxes and your living expenses on top of that to create that after those two expenses in your life. So you have to make a substantial amount of money just to get to 10 rental properties that maybe make you between $200 and $500 a month cash flow, right? So the problem is, how many of you guys have $300,000 after taxes laying around just to leave into control assets? Probably not a lot of you guys. So the number one reason why people do the BRRRR strategy is because of limitations on capital to scale their business. So we have what's called an interest-only loan and then amortizing loans, right? So what would be an interest-only loan? Let's say I loan somebody $100,000 at 12% simple debt interest. That means I'm going to get paid out 12% across a $100,000 loan. There's 12 months, so 1 point a month. So if it's $12,000 off $100,000 for a year, that's a $12,000, that they're going to, I'm going to owe my lender. Now, at any point incrementally throughout the year, if I'm to pay off that loan, I'm always going to owe $100,000. So it's not amortizing, meaning paying down over time. So what we're going to try to do is we're going to use one of a few different funding sources here. So we're going to market in the business or market out there in the marketplace. We're going to find a discounted house that has some equity in it. And what we're going to do is we're going to close on this property using an interest-only loan with potentially what's called a hard money lender, which is a professional lender in your marketplace. Guys, these are going to be asset-based lenders. They're not looking at your credit. They're not looking at your income. They're looking at the equity position in the house. So don't worry about that. So think if you got destroyed your credit, don't worry about it, guys. I was $100,000 in debt before I did my first deal. So you're going to have an asset-based lender or hard money lender. You could also have what's called a private money lender. Private money lender would be local gym owner, local, machine shop owner, made a bunch of money, doesn't have the time, doesn't want to learn the business, but wants to lend it out, right? So private money lenders, credit lines, raising money from people's IRAs, self-directing their IRAs. So these are all interest-only loans. So note what we're going to do. Let's say we find a house that's $150,000. What we're going to do, instead of buying it and leaving all our cash in front, we're going to close on it with an interest-only loan. So let's say it's $150,000 and we close on it. We're going to just use, for this example, we're getting rid of closing costs and carrying costs. We're just looking at the repair costs and the actual dollar to buy the property. So let's say it takes $30,000 to renovate this house. So we bought it for $150,000. We're going to put $30,000 in it. So we're in it for $180,000. But let's say that pushed the market value up. I mean, it puts us up to, let's say we put $25,000 in. That's going to push us up to $175,000 total. But let's say because we've renovated the property, that market value is going to go up to about $225,000. Now, what I want you guys to do is do 0.2 times $225,000 and figure out what that is. Let's just see real quick. And I'm going to go back over this whole process with you guys who really understand the benefits of doing it. So let's say $225,000 times 0.8, which would be $180,000 that we're going to get back from the bank when we do a refi. So what the BRRRR strategy stands for, guys, is we're going to buy a property. We're going to rehab that property. So B is for buy it, R is for rehab it. The next R is for rent it. Then we're going to refinance it. And then we're going to rinse and repeat. So where we're at is we're going to buy it on an interest-only loan. Then we're going to renovate the property. And what we're doing here is we're going to push the equity value up for the forced renovation. That's why people flip houses, because the renovation costs making the house nicer. Now we're going to rent it. And then we're going to pull our money out and go back to the bank and refinance out. And this is when we're going to go into a 20 or 30 year amortizing loan, a traditional loan. But now if we go back to those numbers, I bought it for 150. I put 25 into it. So I'm in for it 175. It's worth 225 now. What's 0.8% of 225? It's 180, right? But if we're in for 175 at this moment, that means there's $5,000 extra dollars on top. So if we refi and the bank gives us 180,000 and our underlying debt service and everything we owe as far as an obligation to this project at this moment, there's a spread between $5,000. So we're actually going to put $5,000 cash in our pocket, have an equity position of 20% in a rental property that's got a cash flow position, and there's 20% equity. Now, when you do a refi, that's a non-taxable event. So that $5,000 is going to go directly in your pocket without having to pay taxes on it. So let's look at long-term and how you can control and scale your rental portfolio. So this same project, what you're using is your time, labor to force appreciation of the renovation to avoid having to leave your cash in the deal. So in this deal, you're actually putting $5,000 in your pocket as compared to leaving $30,000+ of your own money in the pocket. Now you obviously have to buy the house, fix it up, rent it, and go through this process. But this is what you're going to have to do when you guys don't have a lot of money getting started, because you can't just simply leave your money in a deal, if that makes sense. So now what you do, let's look at it in a comparison. Let's say I have $1 and I go to the gas station and I buy a candy bar. That's the traditional way what people do. They have $100,000, they go buy a house and they don't even leverage it through debt. They just pay $100,000 for the house and leave $100,000 in the house. The problem is once you trade that dollar for that candy bar or those dollars for the house, there's no more dollars, right? So this is a way for us to put dollars in, pull dollars out, put dollars in, put dollars out, which is the rinse and repeat process, and do this over and over and over and use that same starting capital that we have. Now, if you guys have, let's say, $200,000 in your bank account and you don't want to use a lender, you can do the same process with your own money, but you're going to use it. So you would buy it instead of having a lender, you buy it on an interest-only loan or buy it with your own money, force the renovation up, and pull your cash flow out, or pull your money out through doing a refinance process. And this is going to avoid you from having all your money stuck in the transaction over time. Because if not, guys, you're going to run out of money unless you just have a really good job or a great way of creating a big sales income, if that makes sense. Now, I guess let's just open it for Tharmela. Let's open it for questions if they want to ask on any of that process, because I can't really see the faces to see if they're following along with me. But does that make sense, guys? So this is what BRRRR stands for: is buy, rehab, rent, refinance, repeat. And so the big part of this is the dollars that you have will go away quicker if you do it a traditional way as compared to recycling your same dollars in and out doing this process, if that makes sense. So buy it interest only, renovate it, push the equity value up, put a 10 in it, rent it, go back, show that rent record to the bank. Usually you're going to have a 6-month seasoning requirement doing this, guys. So after 6 months, the banks will let you refi. And because it's a refi, you're going to pull that money out as a non-taxable event. Now, the goal is to have more money coming out when you do the refinance and not to leave any money in the deal. But traditionally, what you're going to usually see is you're going to put a little money in pocket, break even, or leave about $10,000 in this project as compared to 30+ thousand. Okay. That's kind of the gist of it. Now, I know I only got about 5 minutes, so let's open up for questions, guys, because we went over that pretty quick. But I'm glad to dig onto any part of that process for you and dive deeper into why it's important.
Awesome. Thanks, Connor. And if any of you are in a place where you can't speak out loud, feel free to leave it in the chat box and we'll share with Connor. Connor, one question I have for you to start off is, what are some common mistakes people make when they get into this strategy or when they use this method?
I mean, probably paying too much for their money on the front side. So there's different, every private money is a hard money lender, I guess, but not every hard money lender is a private money lender. So the main thing you guys want to focus on doing, so there's multiple parts of the project that increase your income, right? Find a deal cheaper on the front side, spending less in marketing, raising money cheaper, paying less points for that money, finding better contractors throughout that transaction, having better loans on the back end, right? So there's only so many things you can do. And one of the things that a lot of people do is they just jump into projects and with really expensive hard money lenders and they pay like three points and 14 points or something like that. And it eats up the expenses, or they're hiring or getting a difficult lender on the front end that's going to slow that project down. So when you guys go to hard money lenders, some of the things that you want to ask them are how they're doing their draw requests. So what a draw is when you borrow money. Let's say I borrowed $180,000 on this project and it was $150K to buy the property and $30K in renovation expenses. Do you think that lender is just going to give me all $30,000 in renovation expenses when I walk out of the title company? No. They may give me a little bit up front. So what I'm going to have to do is I'm going to have to pull some money out of my pocket, go do $3,000 or $4,000 or $5,000 worth of work, have the records, have the photos, and send it to my lender, and they're going to come approve it. They may do it by photos. You really want to ask if they have an inspection fee, because some lenders really nickel and dime you guys doing this. They're going to charge you $100, $200 each time you want to draw requests, meaning you want more money from that rehab budget. Now they're going to come out to the property, see you put the roof on, then they're going to approve it. Then you paid to put the roof on. They're going to give you, let's say, that $7,000 out of that $30,000 back to you. Now you go fund the next $5,000 to $7,000. You go back to your lender and back and forth. So the goal is to find lenders that don't make you go through a draw inspection request, meaning slowing you down. Because if you have to wait 2 or 3 days each time they come out to inspect the property just to see if you did the work you're doing, think about your carrying costs on the property: water, electric, taxes, insurance, PITI, all that different, your expenses in the project. So that's one thing, is that they're using a lender that's going to slow them down on the front side. So the longer your project takes, you have carrying costs, your profit's going down essentially, or your equity position is going to be smaller when you finance out. So that's one. Second biggest mistake is they don't understand how to renovate a property, and they do things backwards, and they go in and they do, putting in one thing before they should put the other thing in first. And they're always pulling stuff out and redoing it. So you need to understand how to move through a project sequentially so that your carrying costs are low, and so that you're not overlapping contractors and you're not bringing electricians over plumbers and windows and all this stuff. And you want to make sure to go through the project in the correct order. So that's very important as well, because if not, you're going to increase your carrying costs, which once again decreases the amount of equity you can pull out, right? And then also another thing is, you guys want to make sure that, cutting corners in real estate is not the way you do it. And most investors try to cut corners. It's actually going to cost you a lot of money over time. You always want to renovate your house to the best you can, because this is going to allow you to pull more money out. So let's say you get a higher appraisal than 180, you get 190. What does that mean? Instead of pulling 5K out, put 15K in your pocket. Now that doesn't sound, 10 grand is a lot more, but what I want you guys to think about is the cyclical nature on how your money compounds. Because if you pulled it 5 grand in versus just 10 grand more, well, let's say you're spending 5 grand to acquire a deal that you can flip for $30,000 to $50,000. So that extra $5,000 has a compounding effect to go back into marketing to generate more deals. And this is why it's so important. If you guys are new in business, you need to live below your means. Don't go buy nice stuff, nice clothes, nice cars, and try to keep up with the Joneses like everybody else does. Because what you don't realize is the people that are trying to do that actually don't have money or in debt. And the people that live below their means, like the millionaire next door wearing pajama pants, are usually worth multi-deca millionaire. And because it's so important that your money can compound and cyclically grow like that and exponentially grow, that you want to do everything you can in the beginning of your business to start building up that net worth quickly. Because what most people do is they never create wealth because they spend everything they get. And so everybody's so fixated on how much money they can make. They should be more fixated on how little can they spend. That's the fastest way to get wealthy, is to spend little instead of make more. And that's what people don't understand. But those are some of the big ones, not understanding the contracting process, slowing the project down, not having the right type of lender on the front end that's just going to nitpick and make their life, very stressful. And then just buying the wrong project with the wrong numbers on the front side, usually what people get in trouble with. But as far as the numbers, once you have them static, when you go back to the banks are pretty typical on what they'll lend on each project.
Hey, Connor, I had a question too. What are your top tips for finding a good property to actually use as an investment?
Yeah, you guys are going to have to go off market. The state of the world we're in right now, if you're going to buy anything on market, you're going to need a massive automated offering system, and you need to check the laws in your areas to see even if you're allowed to do that through your MLS system. But the thing about the internet, guys, is you've got what goes on the MLS? I mean, off market, rundown renovation types of properties go on there, but why does somebody put a house on the MLS? Because they have a real estate agent representing them. Now, does a real estate agent want to make a little money, or do they want to make a lot of money? Do they want to make their client more money or less money, right? So they're always trying to push the property up to the top of the market. So as agents, we're trying to get the highest price point possible. As an investor, you're on the 180-degree inverted side of it, where you're trying to get the lowest price possible. And what the MLS, guys, is essentially the largest center of a focus for anybody to look at. So you're going to get all the new investors, everybody's. So you're going to get all these new investors that are overpaying for properties more than you would ever do. So it's just not likely that you're going to get deals. So you need to go direct to the seller. And so this is one thing I want to leave you, because I know we don't have a lot of time. So we built our business direct to seller, doing all sorts of different things, guys: door-to-door marketing, direct mail, outdoor advertising, radio ads, television ads, Google pay-per-click, social media, things, virtual assistants, all sorts of different stuff. The one thing you need to understand is everything works if you work it enough. But the biggest mistake with marketing is most people do one-touch or two-touch marketing, meaning they send, let's say you have $5,000. And you're going to spend out $5,000 in postcards one time to a list of as many leads as you can get. Why not say, instead of doing $5,000 on one campaign, let's do $500 to a smaller house number of leads, but we do it 10 times every month or every other month or something like this? Because what I want you to understand is, when you're only marketing to a house one time, the likelihood that they're ready to sell, especially at a discount for the discount that you guys need at that moment, is not likely. So you're trying to time your timing to their timing when they're ready to go. And then most people market to a lot of houses once or twice, and then they don't get deals, and then they go broke, or they don't want to market again. What you need to do is find the right houses that you want. I like to buy 4.2 brick rancher houses, 1,400 to 2,000 square foot, in nice density areas by hospitals and elementary schools and things like that. So I target it down my list, and I drip market to them. I continuously market to them over time, because let's say you're going to send a 40-cent postcard to someone 6 times a year, every other month. That's $2.40. Let's just say $2.50. Now, what is the average statistic of how often someone sells a house? Most people would say 7 years, right? So take 7 by 250. You're looking at under $2 per house that you're going to market to over a 7-year window of time. So if you're marketing to them consistently, at some point in the future, there's a high likelihood that they're going to sell their house. So if you think about that, you're trying to stay in front of them, consistently dripping over and over and over on a time horizon, like a YouTube video is ticking across time. Because what happens if their timing catches up to your timing at 17 months from now, if that makes sense? So you're trying to stay in front of these same people over and over and over until their timing catches up to the consistency of your marketing, instead of your one-touch marketing trying to randomly connect to that one day when they're ready to go right then, if that makes sense. So you're going to see a lot more success with your marketing to stagger it out and do it over a long-term horizon, and just consistently build name recognition in the marketplace. Now, once you get a few leads, under promise, over deliver on either sides of the business, so that you can start getting referral business, and they'll go tell their friends and family. And that's a great income stream if you guys don't have a lot of money when you're starting out. Really ask people for referrals, talk to contractors, title companies, anybody in the trades, electricians, plumbers. They come across junky houses all the time, right? So if you guys have these types of resources and these individuals in your network, let these individuals know they're looking at houses all the time that are run down, because people are calling them out there. And all they have to simply do is ask them one question: would you be interested in selling your house while they're there? And then if they are, you tell these contractors that if you send me a lead, when I buy the house, I'll give you the work to do on the house. And that's the benefit for them to send you that lead. But that's a good way for you guys, if you're starting out with not a lot of money, just to build your business through relationship marketing.
Awesome. Thanks, Connor. Maybe we can dive into the next part of our session today.
You have a couple quick questions in the chat. I know we're a little time for time, but Tina was asking, can you provide some lenders for investors and if there's any off-market groups to look for properties?
Yeah, I mean, as far as lenders, guys, like the easiest way to go about this is your local. Sorry, guys, I got workers on the property here. I don't know if you can hear them banging. You guys can go over to like your local REI clubs. The fastest way to find the best lenders, hard money lenders, the best contracting services and things that you're going to use, I guess, generically that are easy to find. I guess the kind of like the McDonald's and Walmarts and things like that of the marketplace, those are going to be at your local REI clubs. Now you're going to need to do some digging. The best contractors you're going to get are out there in the field. So if you guys are driving around, what you need to do, I don't know if you can see it, it's kind of loud, guys, sorry about that. What you need to do is look for projects in your marketplace. And what I like to do when I was starting out is I drive by projects and see if these guys are working on them and go in and take a look at how they're doing and get their card. That's one way to pick up good contractors. And you know now, will they actually perform and are they going to do what you need them to do? The other thing is just go to your local REI clubs, and they should have vendor lists there. So all these REI clubs are going to have vendor lists of title companies, mortgage brokers, contracting companies, foundation services, and hard money lenders. Now, if you want the best lenders you're ever going to get, guys, are going to come from self-directed IRAs. So what you need to do is you need to go to IRA custodians, places like Equity Trust Company, Quest Trust Company, all these different IRA custodians. Now, why are they going to be your best lenders? So if you can educate them that they can self-direct their IRA, most of them don't know this. And so there's what's called prohibited transactions when you're using an IRA. You can't lend your money to yourself, to one of your own entities. You can't lend money vertically up the family line. I can't lend to my parents, my grandparents, or my children, but I can lend horizontally across my family to like a cousin, but I can also lend to a different investor. So let's say that you guys are sitting there and you have $100,000 or $200,000 in your IRA, then you're 45 years old and you can't touch it for a long time. And you don't even know that you can do anything with it. And you guys go to that person and say, hey, did you know that you can self-direct your IRA? Well, guess what they're going to do? So if they have 100 grand in their bank account versus 100 grand in their IRA, what's the difference? If it's in their bank account, the temptation to spend it anywhere, food, parties, traveling, anything else, right? Groceries, anything. If it's in their IRA, they can't touch it. So there's less limitations for them to want to have an opportunity cost to put it in different parts of their life or other businesses, if that makes sense. They can't invest it into their own deals because of prohibited transactions. Now, also, they're more likely to leave that money out long term as compared to most lenders want to do short-term loans, but IRA lenders are more likely to give it to you for a longer period of time because they can't touch it anyways. It's stuck in their IRA until they can, go through the process of getting it out later. And then the other thing is they're willing to lend you the money a lot of times at a cheaper interest rate than you would if you were to borrow someone from a direct lender when it was not inside their IRA because it's a non-taxable event. So if you're not paying taxes, you're getting 10% as compared to you're paying taxes on 10%, which creates a higher yield. So they can lend the same money to you at the same interest rate, make more money, and not have the pressure of the time constraint to get that money back in and cycle it through. So the best lenders you're ever going to find, guys, are either from IRA custodians and people's self-directed IRA income, or you're going to find local business owners in your marketplace by going to business networking events. Don't try to raise your money for your investment deals, guys, from other real estate professionals. I hear it like all the time. Like people are trying to go to other people in real estate. They don't need you. They've got their own money for their own deals. You want to go to people outside of real estate that are successful in entrepreneurship, that don't have time, understand the benefits of real estate, and they just want someone that they can trust to put their money into a safe position for them, if that makes sense. So I'd be going to look for business owners and entrepreneurs in your local markets to reach out to is who to raise money from, and don't try to raise money from other real estate investors because they have their money for their own deals. You're going to spend a lot of time doing that and spinning your wheels.
Perfect. Thank you, Connor.
Yep.
And last question here, I know before you got to go, and I know we'll be answering this in just a second. We're asking, do you offer any classes or mentoring? And I know we're about to get into it in just a second, but can you mention how people can actually get in touch with you and, work with you one-on-one?
Yeah. So I don't do consulting, but I do closely work with our partners and train our organization, the agents that we have in our EXP organization. So we have coaching for you guys. If you decide that this is something that you want to partner, come to EXP with us. You get access to my flipping house academies, my other courses, my social media training systems that we created, our team building academies and all that. So we've created a lot for you guys. But it's really difficult for me to, figure out where I want to put my time on a weekly basis these days. As you guys start out in business, it's tough to make any money. And then all of a sudden you figure out business, and all of a sudden it's tough to pick the right decision as far as opportunity cost of what business to put time into and where to put time, if that makes sense. And some of you guys are going to realize that, or realizing that right now. So I don't do consulting. I don't do like investing coaching anymore like I did in the past, but pretty much if you guys are interested in working with us, that's the way that agents get coaching and consulting from me, is to partner with us. And then you have direct access to me. So like if you get a contract or a house and you get under contract and you're scared that you didn't run your numbers right, or you're missing up on the rehab budget, you just simply text me and say, hey, can you pop on and look at this and see if I'm about to drive myself into a train essentially, or jump off a cliff, or is this a really good deal? And so that's some of the stuff I do for you guys. And I can help some of you guys find lending sources, but it's better to have lenders local for a number of reasons. We don't have time to go into this, but there are national lenders and things like that. But I'd rather teach you guys how to find the right lenders, because a right lender can make you an extra 10 grand as compared to a bad lender on the same project. But yeah, so if you guys are interested, Kyle's about to dig into the EXP Realty model, and I'll kind of give you a touch on what I saw with that. So if you guys are on here, it sounds like you guys think like an investor. So I blew the EXP business model off, just to be honest, guys, for well over 2 years. I just kept letting people say, send me videos. I wouldn't watch them, and they kept saying how great it was, and I wasn't interested. And I kept telling people, yeah, I'm sure it's great for you, it's just not for me. I didn't really slow down to take a look. So I was lucky to have another look at the business model, because 4 years ago, I was speaking at a conference on owner financing, and the number one guy at EXP was speaking at the same event. So I got put in a speaker's house for 4 days with him in a small house. And I was blown away with what he showed me. And from my investor cap, kind of go back on income streams, you have active income, residual income, or passive income, and equity models. These are the 3 ways to create income. And so if you look at a traditional investor agent, and you drew like a T-chart with both compensation plans on both sides. On the sales side, usually you only have an active income component. Most all brokerages just have one income stream. So on the investor side, you have all 3 income streams: flipping houses for active income, owning real estate for equity positions as it goes up in value, as tenants pay it down, and then, the monthly residual income. So you have passive money through owner finance notes, passive money through lending money in real estate. So if you think about it, you have all 3 income streams on the investing side, which is why it creates wealth over here. But on the agent side, you just have income. This is why very few agents become wealthy. When I saw EXP, what they did with it was they created a publicly traded company, and they started giving stock awards out. So I said, that's an equity component that agents usually don't get. And then the revenue share model was a team building model, similar to how KW grew, but enhanced the model that we have here called revenue sharing. It allows for residual income. So I said, this is the first time an entrepreneur in real estate can do both sides of the business, because the brokerage that we're at, and have all 3 ways of creating an income. Now, why this is so important, guys, it's just the leverage of maximizing your income that you can't do anywhere else except what we're doing, because now any lead that comes into the office from lead generation, you can maximize on it, which makes you more confident to spend money on marketing and spend more on marketing, because regardless of the price point or the equity position, if you're an agent and an investor, you now find the highest and best use of that lead. So that's really what I saw with the revenue share model. Now, if you guys are going to go in and stay on for the presentation, Kyle's going to do a great job. Kyle's an up and comer in our company. He's going to do a great job for you guys. But just in a few short years, in 4 years, I built a residual income at our company here at EXP with the revenue share model, equivalent to owning almost 400 rental houses with no debt and no management. So when you guys look at that revenue share model, if you're looking at this for the BRRRR strategy to create cash flow, if you use that revenue share model and build your rental portfolio, you'll have your freedom in no time. Those 2 things working synergistically together is the fastest way to financial freedom in business today, in my opinion. So I'll let you guys hop on with Kyle and Tharmela. And then if you guys want to have a conversation with me later, just you guys get with Kyle and reach out, and we can have that conversation, and we'll pop on Zoom with you guys.
Awesome. Thanks so much, Connor.
Thanks, Connor. Appreciate it.
You guys have a great day.
You too. All right. So as Connor said, we're just going to get into the second half of the presentation. So we're going to get into it. As Connor said, this is the model for EXP Realty, as well as our organization here at EXP, the Wolfpack. Now, Connor Steinbrook, he's the co-founder of the Wolfpack, as well as one of our other partners, which I'll introduce you to in just a second. And this is the organization, this is the company that's really been taking the real estate industry by storm and really disrupting the industry. So just to give you a bit of a breakdown of what we're going to do is we're going to start off with the compensation structure. So we're going to go over the 3 different ways you can make income here at EXP. The sales model, the equity model, as well as the revenue share model. Then we're going to go into do actually a live tour of the EXP cloud-based brokerage. And then we're going to move into some of the back-end tools, trainings, and systems that you have here at EXP. And then we're going to finally wrap up with what our group does differently, why we've broken so many records, and why we continue to be the front-running organization inside the company, and how you can partner with us and get free access to myself and Connor Steinbrook on a daily and a weekly basis. So with that being said, let's get right into it. So quickly, I'll just do an introduction about myself. It's not about me, it's about you guys. I just want to give you a little bit of context as to who I am. My name is Kyle Sutton. I'm based here in Toronto, Ontario, Canada. I'm a realtor with EXP. My background is in digital marketing and advertising, more specifically in the e-commerce space. So I built and scaled multiple e-commerce brands into the six-figure mark by leveraging social media. And I also help agents also do that now with their own real estate business. Other person I want to introduce you to is Mike Gerard. He's actually out of Calgary, Alberta, Canada. He is recognized as one of the top realtors on social media in the world, #1 in Calgary, #1 in Alberta. And he is the other co-founder of the Agent Wolf Pack. And he's broken pretty much every single record that exists here at EXP, the most number of personally sponsored agents, but more importantly, the most number of personally sponsored, actively producing agents in the company. Why that's so important and how that's even possible is because of all the additional training tools and support we provide to each and every single one of our agents above and beyond what the company already does. So let's get right into it. I will be covering a little bit more about that towards the end. So first thing I wanted to talk to you about is ownership. So first of all, what I wanted to mention here is that EXP is actually a publicly traded company. We went public in 2013 and actually made our way onto the NASDAQ in 2018 under the ticker symbol EXPI. And actually last year, or I should say in 2020, we were actually one of the top 10 performing stocks in the world on the NASDAQ. And one of the incredible parts is just by nature of being an agent here at EXP, you actually get ownership in the company. And really why that's so important is because, you know, as agents, when we work with clients, and we would typically tell a buyer to buy and not to rent because ownership is so much more important than renting. The challenge is that every other real estate brokerage, you're essentially renting your real estate business because you don't actually have any ownership. Where at EXP, you can. Now, the second thing I wanted to bring up here is really one of the main reasons why so many top producing agents are so excited to move their license over to EXP, and that's called the Icon Award. So at a typical brokerage, just to sort of break that down, when you hit a certain production milestone, you spend a lot of time away from your friends, family, passions, hobbies, you build your business up, you work like crazy. And at the end of the year, you're typically rewarded with, a trophy, a plaque, something along those lines, which is great, but unfortunately, it doesn't do anything for your business. Now at EXP, we actually have something called the Icon Award. Now at EXP, we're on an 80-20 split with a $16,000 cap. Now, once you cap, you actually go all the way up to 100% commission. And when you do 20 deals after capping, you become an Icon agent. Now, the incredible thing is when you become an Icon agent, EXP actually fully reimburses you your entire $16,000 cap back completely for free in company stock. So it's actually the first time ever in the history of brokerages that based on an agent's production, they've been fully reimbursed every single dollar they paid in the company back in the form of ownership. And if that's not incredible enough, what the stock has actually done over the past 5 years is insane. So if you actually got your Icon Award and your $16,000 back every year for the past 5 years, that would be 16,000 times 5, that's about $80,000. But based on where the stock has actually gone over the past 5 years, you'd actually be sitting at over $2 million in company stock, which when you break it down, that's $2 million more than you'd have at any other brokerage doing the exact same levels of production. And this is sort of a reoccurring theme that you're going to see throughout the presentation. It's the ability to get compensated more for doing the exact same work you would do at any other brokerage. Now, next thing I wanted to dive into here is the company growth. So EXP, we just actually passed 71,000 agents literally just yesterday, which is really exciting, being the fastest growing brokerage ever in history. But why that's so important is the idea of being an early adopter. Now, we all understand being entrepreneurs that getting into projects early, you're typically rewarded unfairly compared to those that wait for the opportunity to plateau. For example, if you got into Tesla stock, Google stock, Amazon, Bitcoin, or even just purchased real estate 10 years ago, you're doing pretty well today. Same thing goes with EXP. Right now, as I said, we just hit 71,000 agents, and we're expected to be at 500,000 agents in the next 5 years and 1 million agents in the next 10 years. So right now, it's really a lot of agents have an incredible opportunity to start to build momentum and take advantage of being on the ground floor of what's going on right now. Now, next thing I wanted to dive into here is just dispelling some myths before we go too deep into the compensation structure, because thing is, you hear it all online. You hear people say, oh, agents at EXP, they don't do any deals. They just attract. All they do is recruit. They don't do any sales, all that kind of nonsense. Now, the reality is I like to let the facts do the talking, because despite what people say, despite their opinions, you can't argue with the math and the numbers. So first of all, what I want to show you here on the left-hand side is the sales volume growth of closed transactions, EXP versus the other top 3 brokerages in North America. Now, you can see EXP had a significant increase compared to the other brokerages. Now, the main reason for that is because when you actually save time and you can reinvest that time into income producing activities, your income goes up. Plus, when you have better training tools and resources at your disposal, your income also goes up. But what I think is even more interesting is this here on the right-hand side. So this is the agent growth EXP versus the other top 3 brokerages in North America as well. That was actually for the 2020 stats. Our 2021 stats were actually even more incredible. We actually grew by 69% in 2021 as well. Now, the main reason for that was two main things. Number one, obviously in 2020, when that first happened, the pandemic hit, took the world by surprise and changed up what a lot of people were used to. And in many cases, agents, and just like here right now in Toronto, we just went into another lockdown. Agents are recommended not to go to the office. And in some cases, they can't go to the office at all. Now, the reality is being at most brick and mortar brokerages, whether you can go to the office or whether you actually go to the office, it doesn't matter. You still have to pay for it because that's your broker has to pay for it. So do you. So agents sort of realized, well, even when the office was open, I didn't actually go to it anyway. Now I can't even go to it. I don't really see any value in it at all. Now, the second reason was, obviously because of the pandemic, in many places, actually, real estate was deemed unessential. You couldn't even sell real estate like you used to. You couldn't do open houses. You couldn't do showings like you used to. You couldn't do all these things. And again, same situation that's happening right now. Literally, as of last week, we're not allowed to do open houses here in Toronto anymore. So what happened to a lot of agents that relied on one stream of income being commission, that went to zero overnight or dropped significantly, where agents, what happened was they sort of put themselves and their family in a really vulnerable position by only relying on one stream of income. Now at EXP, because we have multiple streams of income, which we're about to go into, EXP sort of became a safe haven for agents where you can diversify your income across multiple streams of income. So if something unexpected like the pandemic were to happen, you protect yourself and your family against events like that. So next, we're going to dive into the income opportunities that you have here. And just before we do that, there's one thing I wanted to cover and why the income streams are so important. Now, after talking with a ton of agents all over the world about why they got into real estate, I've noticed 2 very common themes. Obviously, after people telling me, I like working with people, I like helping people, all that stuff, which is true, we all do. But for some of the, the real reasons are, they want to create wealth, and they want to create a lifestyle that's flexible for them and their family. So let's start off with wealth. So wealth requires 4 things: multiple streams of income, duplication, equity, as well as residual income. Now, at any other brokerage, you actually have no components of the wealth quadrant, where at EXP, you actually have all 4 components of the wealth quadrant. So despite you actually getting into real estate to create wealth, at any other brokerage, technically you can't, where at EXP, you can. The second thing is lifestyle. Now, lifestyle really requires 2 things: time freedom and money freedom. Now, you can get money freedom at any brokerage in the world. However, you cannot create time freedom because your income, being commission, requires your time invested in creating it. You don't invest any time, you don't create any income, you can't enjoy the lifestyle that you're working to build. So as we're going to go into here, these are the different opportunities you have to diversify your income through our multiple income streams. So the very first one here is you actually have the ability to earn stock or ownership in the company just by nature of being an agent. So we'll start with this first one here. Every single year when you close a transaction, you get $200 in free company stock. Then if you hit your $16,000 cap, then you actually go all the way up to 100% commission, but you also get an additional $400 in free company stock. Now, if you decide to leverage the optional agent attraction opportunities, bring your friends into the company or your coworkers into the company, and they close their first transaction, you also get an additional $400 in free company stock. And then in the middle there, as I mentioned earlier, you have the Icon Award, which again is to do 20 transactions after capping. You get your entire $16,000 cap back completely for free in company stock. Now, the last one here is the Agent Equity Program. It's actually the only optional equity opportunity that we have here at EXP, where you have the option to take 5% of your commission and buy the stock at a 10% discount. Now, again, this one is completely optional. You don't have to do it. However, I'm sure, as you can probably imagine, having the ability to get discounted equity at the fastest growing brokerage ever in history, agents here, they are taking full advantage. Now, the next income stream I wanted to dive into here is probably what a lot of you guys have heard of, is the revenue share. So this is actually a monthly distribution at the company through the company's dollar. So EXP actually retains 50% of all of the revenue that comes in to give back to the agents for helping the company grow. And one thing I'll mention here is sort of this stigma or false assumption people have that EXP is sort of like a pyramid. Now, let me sort of break down the difference between a traditional brokerage versus EXP. Let's say you have a traditional brokerage, something you guys all know, like Remax. So you'll have the designated owners of Remax. In our case, would be a province or a state, Remax Ontario. Then you'll have the owners of the specific city, so Remax Toronto, and then you'll have the owners of the specific office within that city. Then you'll have the managers, then you'll have the agents. Now at EXP, we actually only have two levels. You have the management and then the agents. That's it. So when an agent at a traditional brokerage closes a deal, the money goes straight to the top and you never see it again. Where at EXP, when you close a transaction, 80-20 split, 50% of that revenue comes back to the agents for helping the company grow. So let me actually walk you through exactly how this works. So this is our revenue share chart. It's actually modeled after the Keller Williams chart, except in Keller Williams, they actually share profit where we share revenue. So profit after expenses versus revenue before expenses. And when you really look at the math and numbers, you'll see that there's a massive difference between the two. And the one last thing I'll mention here before we dive too deep into it is these 7 tiers, which you can see here, how you get compensated. But there's also 7 tiers of value above you. So if you do decide to partner with us here at EXP, one of your partners will be Connor Steinbrook, who you guys met earlier. And because he is compensated through the company, when you do transactions, he is incentivized to help you grow your business. And that's how he's able to, and some of our other partners like Mike and some of the others I'm going to mention a little bit later on, are able to give you so much value completely for free because they're compensated through the company. So let's go through an example of exactly how this works. So every single person at EXP has 7 tiers. And let's say you bring your friend John into the company. So John would actually be on your first tier. Now, let's say John closes a very simple $10,000 commission, just to keep the numbers very, very easy to understand. So 3.5% of $10,000 is $350. So keep that 350 in the back of your head. So I'll give you a visual diagram here. So we're on an 80-20 split. So 80% of the sale would go to John, or $8,000. 20% of the sale, or $2,000, would go to EXP. And then out of the EXP company dollar, not John's money, out of the EXP company dollar, you would actually receive $350 out of that transaction. Okay, let me just make this clear. It does not touch the agent's commission. It comes out of the EXP company dollar. Now, let me run you through a second example. Let's say John brings in his friend Sarah into the company. Now, Sarah would actually be on your tier 2. So you'll see here, these two numbers added together is 4%. So $10,000 commission, 4%, $400. Let's walk you through another example. So Sarah, 80-20 split, $8,000 or 80% goes to Sarah. 20% or $2,000 goes to EXP. And then again, at an EXP company dollar, you would receive 4% or $400 from that transaction. And as you can see, as this starts to scale out and as you start to bring more agents into the company, your income can really scale exponentially. Now, I'll give you an example here. just like Connor was saying earlier, he's able to have a passive income of revenue share equivalent to about 300 rental properties. Here's another example of another one of our partners out in San Antonio, Texas, Pat. This is an example of his revenue share. Now, that 165,000 US dollars, that was not for the year. That was what he makes per month after being at the company for 6 years. That's it. Now, the incredible part is for Pat, he actually that month, he actually wasn't even selling real estate that month. He went on a trip, a fishing trip for an entire month, didn't answer a single phone call, text, email, message, or anything like that, and was still able to earn over 6 figures that month because he's leveraging the revenue share model. Now, a traditional agent, if you're just making money off of commission and you decide to go on vacation, well, it's very hard to really create that lifestyle, because while you're on vacation, you're going to be missing out on listings, you're going to be missing out on buyers, you're going to be missing out on deals, and really you're going to be stressing about how you're missing out on money. Whereas an agent like Pat, when he comes back from vacation, of course, he can get back to doing his transactions, but while he's on vacation, he can still earn money each and every single month. Now, the last thing I wanted to mention here are two nuances of the revenue share. And it's actually one of the main reasons why myself and a ton of agents actually come aboard and join EXP. First of all, the revenue share you build, it's actually willable. So I'm sure it's the same for a lot of you, but for most people, the most important thing to them is their family. And that's one of the reasons why they work so hard. Now, unfortunately, at any other brokerage, if something were to happen to you, if you were to get into a car accident or something like that and pass away, unfortunately, you're leaving your family with what you have at that moment, which in a lot of cases is not necessarily enough to sustain the family for a long period of time. Now at EXP, if that exact same situation were to happen, somebody in your family can actually inherit your revenue share and continue to receive the residual income for the rest of time. Number two is actually the revenue share you build, you can actually continue to receive it even if you stop closing transactions. So what this is sort of, a lot of agents think of it as a retirement plan. So if you want to work, let's say 10 more years of real estate, selling deals and doing transactions, but you want to stop doing transactions after 10 years, at a traditional brokerage, at the end of those 10 years, you get a thank you and a handshake from your broker, and suddenly your income goes to zero. Now at EXP, if that exact same situation happens, if you want to leave the business after 10 years, as long as you maintain an active real estate license, you can continue to earn your revenue share each and every single month. And the reality is it's actually probably growing because you have agents under you that are still trying to build their business. Now, the next thing I wanted to do is actually do a quick journey into the EXP cloud-based brokerage. So just give me a second here as this loads up. And one thing I'll say as it's loading up is, laugh all you want. I thought it was ridiculous the first time I saw it. You might too if you've never seen it before. So just give me a second here. So this is our cloud-based office. So instead of going to a traditional brick and mortar location, EXP has removed those costs and been able to give the agents more tools and resources. But more importantly, why this is so powerful is the ability to save time. So you can see everybody has a little avatar character here. You can come in, there's an information desk. You can ask any question you want. And then here on the left-hand side, these are actually all of the countries that we're open in. Right now, we're open in 19 different countries. Our goal is to be open in an additional 25 new countries by the end of this year, which is absolutely insane. And one of the main reasons why we're growing so fast. But why this is so important, why this helps so many agents is because there's actually over 1,000 paid active employees here to help you with each individual section of your business. So instead of at a traditional brokerage where, you'll have one broker that wears every hat, they're taking care of, new agent onboarding, training, risk management, compliance, everything you can possibly think of is all done by one broker. Where at EXP, because we have so many different employees, each individual aspect of the agent's business is for a different department. So let me give you an example. Let's say you have an issue with tech, something with your websites or your CRM, something like that, and you need help. Now, at a traditional brokerage, what you have to do is call your broker, hope, number one, they can actually help you with tech, or number two, hope they even have time to be able to help you. Or your other option is you have to call overseas, email support, everything like that. Either way, it doesn't matter. It's a massive waste of time. Now, as we talked about, when you save time, reinvest that time into income producing activities, your income goes up. So at EXP, if you have a problem with tech, you click here, you go to the lobby, and then in just a couple seconds, once this loads in, you'll see as you walk into here, you just take a ticket and you'll see here, there are 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 people that are able to instantly remote log into your computer and help you with any issue you have relating to tech. Now, the incredible part is because we're actually open in countries like Australia, there's a massive time difference. Now, what that allows you to do is actually get support Monday to Friday, 24/7 or 24 hours a day, Monday to Friday, because of the different time zones. So no matter what time it is, you can actually get support instantly and get back to working on your business. Now, the next thing I wanted to show you here are the training. So I know a lot of people, training is very, very important. It's very important to continue to learn and continue to grow and increase your knowledge. So the way that the training works here, I'll show you. We have these sort of live auditoriums. The training is probably going to get started in just a couple minutes here. And we actually have 50 hours, so 50 hours of live training each and every single week. But the incredible part is the training is actually done by those same icon agents. So those are the agents that are doing 20, they're doing a cap plus 20 transactions in today's market. So no longer are you getting trained by one person once a week who hasn't sold real estate in 20 years. You're actually getting trained by somebody who's in the trenches and actually working in today's market and is a top producer. Not only that, you're getting training not just from agents in your city, state, or province, but also, and not even just in your country, but agents all over the world that are able to actually help you out and train you with the strategies that are working for their business. Now, because we have 71,000 agents worldwide, there's a ton of icon agents that are able to actually help you with your business and help you grow 50 hours every single week, which is absolutely incredible. And one of the other reasons why our agents do so much production and why we're the #1 independent brokerage in the world. Now, the last thing I wanted to show you is the broker rooms. So I'll show you for the US. It's very similar for every single state, province, and country that we're open in. But let's say you have a problem with your transaction, contracts, or legal, things like that. You want to get some support. Now, let's say you're down in Florida. All you do is you click Florida. And once you hop in here, you'll see that there are 1, 2, 3, 4 state brokers that are able to instantly help you with any issue you need. And the incredible part is because this is their only job, they actually have the time to help you. They're not worrying about new agent training and onboarding and support and tech and accounting and all that stuff. That's taken care of by other employees in the cloud, because there's over 1,000 employees in the cloud. So what it does is not only do you get immediate support, but you also typically get better support. And especially being a new agent where you need the support the most, you can actually get the support a lot faster and actually get your help and get back to work immediately. Now, the last thing I'll show you, one of my favorite things about the cloud-based brokerage, when you're done, you got your support, you got your question answered, you got everything sorted. All you have to do is click, and you're done. No driving in traffic, no driving in the rain, no driving in the hail, no driving in the snow, none of that. It's just right back to work, or you can go back to spending time with your family. Now, next thing I wanted to show you guys here before we go into our organization and everything like that, how you can actually partner with us, is some of the back-end tools and services. So first of all, every single agent at eXp gets free access to KV Core. Now, if you don't know what KV Core is, it's widely considered to be one of the best lead gen website database nurturing CRM softwares in the industry. And I'll show you an example of my website here. So this is completely for free here, and it's completely IDX integrated, meaning that every single listing in your local market is actually here updating in real time. So you can use that to search for your clients or to search for yourself, or a combination of both. Everything here is completely customizable. Testimonials, just listed, just sold, everything like that you can adjust here. Now, again, this is completely for free. However, if you did want to get this from KV Core directly, because it's a third-party platform, you can, but it's going to cost you anywhere between $8,000 to $10,000 per year. Again, with EXP, you get it completely for free. Next up, you have Making It Rain, which is a fully automated Google pay-per-click software where if you have a little bit more money than time, they can fully automate your Google pay-per-click advertising campaigns. ShareWorks by Morgan Stanley allows you to track all of your equity awards in real time. And then SkySlope. SkySlope is great because it's sort of a digital transaction management or virtual filing cabinet where all of your paperwork can be reviewed for compliance by your broker to make sure everything is in line. There's no missing signatures, no missing papers or anything like that. It's all stored here on SkySlope. Now, what I'll do is I'll pull up the education calendar here. As I mentioned, we have 50 hours of live training each and every single week. And here's an example. So right-hand side, these are state and province specific compliance training, contract training, things like that. They're all the different states and provinces on the right-hand side, where on the left-hand side here, these are the classes that are taught by the icon agents. So you have tons of different classes, from how to find buyers, mindset for success in business, how to prepare for an appraisal, maximizing your sphere. We have things on buying real estate with crypto. We have things on Spanish classes, digital marketing, advertising, everything you can possibly think of when it comes to growing your real estate business. We have live training, 50 hours every single week, done by these top icon agents. Now, the last thing I wanted to show you guys here is Workplace. Now, this is one of the most powerful tools that we have, and it's one of the reasons why we actually do more referrals than any other brokerage in the world, because we are independent. We're all under one umbrella. So all 71,000 agents are all under this one umbrella. Now, Workplace, it's actually by Facebook. It's very similar to Facebook that you guys are familiar with, minus the advertising, minus the distractions, minus the nonsense. It's strictly for business. So let's say, for example, you had an agent, you had a deal that you wanted to refer out to a place like Dallas. You just type in Dallas, and here comes some of the top Dallas agents in the company. Same thing with every single other city, state, province, or country that you're sending a referral to, including places that were open in like Spain, Portugal, South Africa, all these different countries you can also send a referral to. Now, the other thing is the Workplace chat. This is actually the ability to chat with any single agent in the company directly, as far up as the founder of the company, Glenn Sanford, and he would actually respond, which is incredible. And we're actually having a meeting with him next week. Our group is actually getting a meeting with the multi-billionaire Glenn Sanford, and he's actually meeting with our organization because we're one of the front-running organizations in the company. But not only that, you can talk to brokers or other people in the company or other agents here. Big thing I use it for is the pre-construction group. I work in pre-construction here in Ontario. It's very, very popular, and everybody shares their different projects, their exclusive allocations and access to help have a wider pool of projects for my buyers, which is very, very helpful for me. Now, lastly, we're going to wrap up with what our group does differently, how you can partner with us and get access to everything that we offer completely for free, including support from Connor Steinbrook, who you guys met earlier. So the Wolfpack, one of the things that we realized when we were, creating some of the trainings and tools for the Wolfpack is that a lot of agents don't have a strong social media presence. They don't know how to properly leverage social media in order to actually generate business. So what we did is we actually created the Social Agent Academy. This academy was actually created by Mike Gerard, who I introduced you guys to a little bit earlier. And this is actually the #1 selling social media course for real estate agents on the internet. And this course has everything from Facebook to YouTube to Instagram to LinkedIn, all these different platforms. And it shows you step by step in sequential order exactly how to build and scale your business, even if you've never done it before. Now, I'll show you guys real quick what it looks like here. So this is an example of the Social Agent Academy. Now you have Facebook, Instagram, YouTube, LinkedIn, and some more on the next page. But these ones here, the A to Z modules, are something that a lot of agents love, because what it does is it takes any specific goal that you have as an agent and shows you step by step, start to finish, exactly how to do it. For example, let's say you just got your first listing ever and you want to know how to market it on every single platform and get it sold for the most amount of money in the least amount of time. This shows you step by step exactly how to do that. Let's say you're a brand new agent with no business at all and you want to know how to get your first deal for free. Here's exactly how to do that. Now, the other thing is we also show you step by step how to create a strong personal brand and top of mind awareness so you can actually be the quote unquote Ryan Serhant of your market. So this is all included for every single agent in our organization, absolutely free. Next up, I just want to show you a couple quick testimonials from our organization. This is actually my own personal testimonial here from the Facebook Ads Mastery. I use these strategies combined with some of my previous training in Facebook to generate 125 leads for 59 cents each. Now, 59 cents, if you guys have ever tried Facebook ads before, and you've probably, most people get their leads for $5 to $10 or more if they don't have the right strategy. Getting leads for 59 cents is absolutely incredible. And it's really helped me generate a ton of new business for investor clients that are looking to purchase various projects that we're selling. A couple other testimonials from the YouTube side is actually this guy here, Suman, he's actually out of Texas as well. And he was actually a brand new agent in his first year in real estate. he actually closed, it's actually not even updated, he's actually closed in his very first year, 87 transactions solely through YouTube. Brand new agent in a brand new city, never lived there before, without spending a single dollar in advertising, without spending any time door knocking, cold calling, or any traditional services at all. Then you have John Pena on the right-hand side here. He was actually a new agent at KW for 6 months and actually had no deals and was planning on quitting the industry entirely. Now he did the exact same thing, started up his YouTube channel, and he's closing 3 to 5 deals per month strictly from YouTube. No ad spend, no cold calling, no door knocking. And he just actually retired his wife from her job to actually help him with all of the transactions, which is absolutely incredible. Now, some additional training tools and support. I know Connor mentioned these a little bit earlier, is you actually have full access to Connor's real estate investment course. So it's a step-by-step course showing you even more depth than what you guys heard today. It's actually over 100 videos, exactly how to do the strategy, the BRRRR strategy that Connor was talking about today, completely for free. Then you have the Revenue Share Team Building Academy, which shows you how to build your own residual income and scale your business by leveraging the revenue share opportunities that we have here at EXP. Then we also have 5 mastermind calls every single week, which is actually 5 times more than any other group inside the company. And what we do on Mondays, we do team building, sales, as well as communication strategies. Tuesday is all about social media, business building, and branding. Wednesdays, we actually have a group that's exclusive here, mainly for our GTA and some of our other partners outside in the States as well. And then on Thursdays is a group leader call for the top leaders in the company, helping them scale their business. And then on Fridays, we actually have top C-suite individuals or executives in the company that come in and teach you either about their business or some future plans for the company. And that's every single week on Fridays. Finally, we do have direct one-on-one support, like Connor said, with him, myself, Mike, Thermella. All of us will be able to help you out with anything you need relating to your business, a marketing plan, Facebook ad strategy, whatever you guys need. We'll be able to sit with you one-on-one and help you out with all of that. And number 5, this is one of the reasons why we're growing so fast, is because we actually help you grow your revenue share organization for you. Let me sort of break down what happens at most other groups in the company and how they attempt to grow. Typically what they'll do is they'll send agents a video done by somebody else and say, hey, watch this video. Once you're done, come join me and come make me money. Which, you know, if you ever get sent a video like that, that's honestly one of the most disrespectful things they could do, because what it's saying is, I don't care if you're a new agent. I don't care if you're a top producer, team leader, or broker. You're the exact same thing as everybody else. Now, what we actually do is we would actually sit in one-on-one with any agent that you want to talk to, break the model down for you so they properly understand why this is such a life-changing opportunity and how it's going to actually help their business, and tailor it towards them and what's going to help them. Not what we care about, what that agent actually cares about. And then when they want to join, they would actually partner with you and you can continue to grow your revenue share. Now, what that does is saves you time so you can actually focus on your production while we focus on helping your team grow. That's actually why agents in our organization actually scale both sides of their business, the revenue share, the residual income, as well as the actual production side of the business through the training tools and support. Now, lastly, as we wrap up here, I'm just going to go through the fees. So we'll go through US and then Canada. Now, if you guys are from a country other than US and Canada tuning into our presentation today, very similar numbers, some slight difference due to currency exchange. Send us a message. We'll be happy to sit down with you and break down any slight differences that you have in the numbers. So with the US, as I mentioned, 80-20 split with a $16,000 cap. Once you cap, you go all the way up to 100% commission for the rest of the year, and you go down to just a $250 cap transaction fee. Now, once you do an additional 20 transactions after capping, that's when you become an icon agent. You get your $16,000 back completely for free in company stock, and your transaction fee is further reduced to only $75. Now, the standard cost, the first month is just $149 to get everything set up. That includes access to all the paid employees in the cloud, Morgan Stanley ShareWorks, KV Core, 1,000 business cards, and everything else that I showed you today. And then monthly, it's just $85 per month. Per transaction, there's a $25 broker review fee just to review all of your paperwork, and then a $40 risk management fee that caps at $500 per year. And then in Canada, very, very similar, just some slight tweaks based on the currency exchange. 80-20 split, $16,000 Canadian cap. After that, you go to 100% commission for the rest of the year. with a 285 transaction fee per transaction. And then again, when you do 20 transactions after capping, you become an icon, you get your $16,000 back completely for free in your company stock, and the transaction fee is further reduced down to only $75. The startup fee is just $199. And again, that includes all of the features that I mentioned, 1,000 business cards, all access to everybody in the cloud, KV Core, ShareWorks by Morgan Stanley, everything I mentioned. And then monthly, it's just $139 per month. And then finally, there's just a $29 broker review fee per transaction. Now, finally, if you guys did like what you hear, you want to learn more, and you guys want to partner with us and join the fastest growing organization in the company, very, very simple process. All you have to do is just fill out a simple form, name myself or Thermela, whoever invited you here, as your sponsor. And then you get access to all of the tools, training, and resources that we provide completely for free. And of course, all of the additional support that EXP provides you guys.